All right, good morning, everyone. Good morning, and a very warm welcome to today's training and sensitization on the simplified pay-as-you-earn return. We thank our esteemed employers for making the time to participate in today's engagement. For those who've been with us since March, as you know, we've had engagements in March, May, June, and July, and we want to walk this journey with our esteemed employers to ensure that they understand the upcoming changes when it comes to the simplified return. My name is Mendy Mwangi. I work within the Taxpayer Experience Division, specifically within the Training Unit and Stakeholder Engagement within the newly formed Micro and Small Taxpayers Department. And I'm delighted to be joined by our lead trainer for the day, Mr. David Busaule, who will introduce himself shortly. Busaule, good morning to you. Allow me to just request before you come on, and so that we can be on time as we only have about 2 hours this morning, to remind our employers about 3 key issues. First and foremost, as we know, we've just come into a new financial year and coming off of a successful filing season. We were working towards ensuring the next year for our employees is an even more successful filing season, and we request first and foremost our employers to be using the correct P9 templates, the correct format, and that format is available on the KRA website under Publications tab. I note majority of us are using it already, but for the few who are not, please utilize the new format, and that template is available on the website. Following from that, once you're using the new template, we're asking you also to be issuing your P9s as early as possible. This coming financial year, we're going to work and encourage our employers to issue their P9s as early as January, so that we can ensure that our employees, the bulk of the people filing their returns in the new year, can do so by even March, so that the people we're left with are people who are either filing business income or nil returns, and we don't have system glitches like we experienced in June this year. Finally, it's also to encourage our employers to comply with the recent changes that have come about with the Finance Act 2025, and that is to grant their employees who are eligible for certain reliefs and allowable deductions, to grant them those reliefs and deductions at the point of payment in the monthly payroll. Essentially, when they're paid, they're granted these reliefs so that they have effectively more money in their pockets at the end of every month, rather than upon filing their return, finding themselves in a refund position and waiting upwards of 3 months to receive their refund. So once again, karibuni sana. Thank you for making the time to be here. We don't ever take it for granted that you honor our invites and you make the time to participate, and encourage your teams to join so that we're all walking this journey of compliance together. I know Busaule will talk about it shortly, but even as KRA turns 30 this year, we're moving towards a collaborative effort, co-creation, and agility. So without further ado, Mr. David Busaule, good morning to you, sir. Karibu sana. I note you were under the weather yesterday, so I'm trusting that you have been taking lemon, honey, and ginger, and are in a better position slightly today, but tumekuombea. Karibu sana. And as Mr. Busaule introduces himself and begins his presentation, as always, we encourage you to utilize the Q&A tab to post your comments, questions, concerns, compliments, feedback about your experience already with filing the new simplified return, so that we can work towards incorporating that feedback in enhancing the return as we move towards a successful new financial year. Karibu sana, Mr. Busaule, and over to you. Good morning.
Hey, morning, Mandy. I think, yes, we requested the people joined to join us in a serious prayer and fasting. A lot of traditional herbs and concoctions, but you can see. Anyway, we'll try our best to do the training today, and give me a moment, just like a minute, maybe, then start, like 1-2 minutes max.
No problem. We are still experiencing that same challenge as yesterday with the echo. So once you're back, maybe I'll request you to do what you did to resolve the issue last time. But no pressure. We will be patient. So esteemed taxpayers, utilize the chat. I've already seen a number of questions, comments, and concerns coming in. So we appreciate this engagement. We always look forward to an engaging and an interactive session with you all Busaule and his team are the process owners of this return. So by and large, they have a 360-degree view of this return and can be able to respond to your questions, comments, concerns, and receive the feedback as well. I note that a number of concerns are related to the CSVs that are on the website. I think a number of taxpayers are unable to download them because they seem to either be corrupted or coming up in the wrong format. So we've notified our team. We apologize first and foremost for that. I think that issue also came up in June and it's yet to be conclusively resolved. So apologies for that. I know there's a team trying to work on that to make those 3 CSVs available. I know Busaule will also talk about it when he begins, but for those who might have tried to file last week, as we know the pay return, you can file it before the end of the year. So, sorry, I beg your pardon, before the end of the month. And once you close your payroll, you can always go ahead to file your pay return. So for those who might have tried to file last week and experienced challenges ranging from certain columns were grayed out like shift, or certain rows were not auto-calculating the payee amount, among other issues. This weekend, iTax was enhanced and the pay return was again, any bugs that had existed before were corrected. So you can re-download the return as from Monday this week, and you'll be able to have a return that doesn't have those errors that were appearing last week. So for those who might have had that concern, please note that there's an updated payee P10 on both the website and your iTax pages. So please utilize that. I think that'll be, again, a big question coming up, but you can use the ones that were updated recently.
Okay.
All right. Thank you, Busaule. Welcome back.
I think I'm following your advice. I'm using hopefully will not have an echo. Am I audible?
You're audible from my end. Allow me to, as you proceed, in case the issue comes up when maybe you project your screen, I can let you know whether the concern has come.
Okay.
Yeah.
Okay. Good morning again. Once again, my name is David Busaule. I'll take you through the iTax presentation, the simplified payee. Let me just share my screen, but of course, I'll just give a few opening remarks on that. Is my screen visible, Mandy? Okay.
Yes, we're at the return, the Excel return.
Okay. Okay. Welcome to this training. I come from a business. I come from a department called Business Strategy, Technology and Enterprise Modernization Department. We are currently running with this initiative to just ensure your tax filing is simpler, it's easier, it's fit for purpose, it's agile, it's basically good stuff for you to be able to comply with your taxes. Just again, please note, we're not just simplifying the pay return, we are simplifying the VAT return. For those of you who are VAT return, we are coming up with a web-based return, which totals there by end of this year. We are coming up with a simplified income tax return for persons with employment income. I think Mandy had mentioned this to complement from lessons learned from the last filing season, and also just to ensure that we are able to support you better. The income tax return for employment income next year will be more pre-filled with more fields, including AHL, including SHA, including SHA or SHIF, including affordable housing levy. And of course, probably the only thing you'll be coming to put in will be maybe mortgage and insurance relief, because for those ones your employer has not, the details required in the income tax return will not be in the pay return, but at least we'll be simplifying it to a high extent than what you've experienced, again, to just make it easier for you. We are pushing to ensure also you are able to file your income tax return for next year through the mobile app. For employment income only, you'll probably be able to file through the USSD and even through WhatsApp. So I think there are quite a number of initiatives just to enhance the filing channels for persons who need to file returns, including nil returns, and especially persons with employment income only. And of course, will also be validating your expenses in the next year's return. So please, when you are dealing with your suppliers, especially those of you who are in business, please ensure that you are being issued with invoices for every purchase you are making for a business initiative, so that come next year, all your purchases and your expenses are available in the return. And so there's quite a lot happening on that space. Basically, you'll be seeing a lot of returns being, we are moving most of our Excel returns, our remaining Excel returns. We want to move them to web-based, hopefully again by next year, June. So again, quite a lot happening on just the aspect of it. So I think KRA is in the 9th corporate plan. KRA is taking the aspect of tax simplification and agility, and just making our tax processes fit for purpose, being a major goal for us in this period up to June next year. So you'll see a lot of different modules in iTax. So it's not just PAYE. We are doing so many things across board. I think we'll be interacting with most of you on different things as and when we roll them out. Now, coming back to the end of the day, which is pay as you earn. We started this journey that was end of March 2025, where we started training employers, getting your feedback on what KRA had thought about the simplified pay return. We are moving from an old template. We had any major simplification on the pay return for 12 years since iTax started in around April 2013. We are now going probably towards 12 and a half years. We had never done any serious simplification or modification of the pay. We basically have just been updating the legislative changes, but the main framework, the main framework of the return has not changed much. And we thought, come now, we can have this. We can just try radically change how pay return filing is being done. And now this simplification of the pay journey, we've started with the Excel pay return. We'll be moving to the web-based pay return, and I think so. For now, what I'm presenting is the simplified Excel pay return. That is the first phase of the simplified return filing journey. What we've also done is in this current space, we've already partnered with the human resource information system. That is the human resource information system for government, where we've already partnered with them. We've worked with them closely, and they'll be rolling out a new payroll system for the government sector. It's currently not in use. It will be rolled out probably this month, if all goes well, for the August payroll, where entities like ministries, like departments, like agencies of government, including devolved units like county governments and county assemblies, will be the first people to start using these upgraded human resource information system. It is totally different from the IPPD or the other system the government guys have been dealing with. For us, this is a major milestone we've achieved, because we have actually delivered, we've actually enabled this government to be able to file through an API platform, an application programming interface, in a way which they will not be required to come to iTax to file their return. So what I'm going to take you guys, the government sector who have already been onboarded through the human resource information system, and they'll be filing through the API, them, they'll not be coming to the Excel return and uploading. They will be closing the payroll in the human resource information system. The pay return will come seamlessly to KRA without them having to log into iTax. The payment process will go through IFMIS to central bank. Once they make the payments, all the beneficiaries of the payroll process, including KRA for pay as you earn, KRA for NITA, KRA for affordable housing levy, the beneficiaries like NSSF and NITA and SHA or SHIF, they'll all receive their payment seamlessly without the government entities having to log into KRA or log into the SHIF portal or SHA portal, or to log into the NSSF portal to upload some of these byproducts of the payroll. So again, that's quite a big milestone. And in the subsequent phases of this simplified pay return, we'll be providing that opportunity to the private sector to be able to again also benefit from filing through the API, where for those private sector employers who will be willing, will facilitate you to be able to integrate with the application programming interface solution. And now you'll also be able to file seamlessly from your payroll system and initiate payment seamlessly from your payroll system without having to come into iTax, again, as an additional channel of filing for those who are willing and they have relevant systems and also relevant expertise to do this. So that's basically phase one. Phase one has been the simplified Excel pay return, which I'm going to take you shortly, and also the filing through the API for the government payroll by us integrating with the Human Resource Information System, the IFMIS, Central Bank of Kenya, and iTax being in one ecosystem and allowing these guys to be able to file from the comfort of their payroll system. Phase two, we are going to roll out the web-based pay return. So we are not going to switch off the Excel because I know some people still, due to network issues, due to maybe they have just come to love Excel. You can never tell. So we are not looking at restricting Excel. The goal of KRA around this simplification of pay return is to open up, provide channels of filing for employers, use the channel which fits you best, and proceed to comply. So if Excel still will fit you best, we'll maintain the Excel return. Moving towards a web-based pay return. The web-based pay return, again, will come and, of course, resolve most of the issues around some people who are having challenges, guys who are having, guys with Office 365, guys with Mac, with the non-Windows operating systems. It will be now much more seamless for you to be able to file using web-based return without probably having to do certain and certain modifications to your Office 365 or to your Mac non-Windows filing systems to just be able to comply with pay as you earn, and not just pay as you earn, but probably many other returns within KRA which are still Excel-based. And I think I mentioned in the beginning, we are transitioning almost all of our remaining Excel pay returns to web-based to the best of what we want to try see if we can probably pick two more common returns to web-based, probably the excise return for goods, and maybe one of the returns, so the income tax company return or the partnership, or all of them. We are trying to push ourselves to the limit and try see if we can push these returns to a web-based format to again just enhance accessibility, so your user experience, and of course we don't just move it to web-based. We want to move it in a simplified version to a web-based. So we don't just want to say the same Excel will move to web-based, and that's why it's not just as easy as it seems. There's quite a lot of thought process which goes into that. So that's the second phase, and also in the second phase, we are trying to come up with a mobile app for employers who will be having less than 10 employees. So again, by October to December this year, we should have rolled out the web-based pay return, and also we should have rolled out the mobile app for employers with less than 10 employees. So if you have less than 10 employees, your payroll is not complicated, not many things, you can be able to file through the mobile app by December this year latest, to just again make it easier for you to be able to comply. And then of course, phase 3, which will be running up to 2026, that one will be rolling out the third phase of the pay simplification. We'll be rolling out a simplified payroll system for the micro and small enterprises, a simplified one. We don't want to compete with the big players in the market. For us, we are coming up with a simplified solution for the people who cannot probably afford a certain level of sophistication within their business enterprises, and they'll be able to use that simplified free payroll system by KRA. And of course, we'll make it integrated back to the iTax system seamlessly, so that again, don't have to come from the simplified payroll to come and file the pay return. And I think on the simplified payroll, we're already working with some of our solution is already coming soon in the eCitizen on the simplified payroll, and it will be probably out by December, hopefully, even not June 2020. Simplified payroll where SMEs can use that simplified payroll and still transition to filing seamlessly without having to log into iTax and maybe download the Excel return or fill the web-based return. Again, on the first 3 of the simplified pay return, it's just good for you to understand the overall scope, so that you also plan accordingly as KRA plans its agenda on this. Will also be enabling employers to be able to file a pay return using a previous pay return. So for those employers whose payroll systems are pretty much standard, you are having 20 to 30 employees, salaries are almost 20 their emoluments are almost standard, their shift contribution are standard, the NSSF is standard, their AHL is standard or with very minimal modification. So basically the payroll is pretty much standard across all the various byproducts of the payroll. You'll be required, you'll be enabled to be able to file the current return using the previous pay return. And of course, will allow you to make certain minimal modifications. And again, it will go a long way just to make it easier for some of the, especially again, the micro and small enterprises to be able to complete their payroll correctly. I think though on a high scale, and of course, we'll be continuing to roll out our API filing solution to any employer who is willing up to June 2026. It's being basis. We are not saying you must come in, but I think once you realize the benefits which will be there, we believe the large and the enterprises will run towards filing throughout using the API, especially if they have a good payroll system and they have the expertise and they're able to integrate the payroll system with the KRA payroll solution. So I think those on a very high level. So on just a very high level, that is what KRA is pursuing on the payee simplification. So quickly, we'll move to now the filing process. I'm trying to access some. So I don't think I want to belabor much on this aspect, but you log in. Let me just show you. You log in. Of course, I believe, especially the individual employers, if you are a sole proprietor and you are an employer, please note you can log in with your PIN or with your ID. Again, this one came in around May last year, and I believe you guys have been using it when you're filing even your June returns.
So, sorry to interrupt. Just to confirm, we're still seeing the Excel sheet.
Oh, I was. Let me. Okay, was I sharing the screen? Okay, I think I was sharing a tab.
Yes, now we can see the website. Thank you.
Thanks, Mandy. You can log in the filing process quickly. The employer logs in, but I've said as an individual, you can still log in with your ID when you're in iTax instead of the PIN, just again to make it easier for you. Okay, the account has been locked. Oh, okay. Let me log in with a different PIN. P20601. So you log in as an employer. Put the password. You'll come, I think, you'll come to returns, file return. So this is the employer. The same thing, nothing has changed on the process because I want to go directly. My test environment is still misbehaving. But anyway, when you go to the file return, you'll be able to see the various options. You can download the old template. You can also download this. You'll see download simplified pay. So please go to download simplified pay return. When you have that, you will download the return. It will come in such a format, which you can see on the Excel. So you can just go to filing. As we go by, let me just again ask someone. Okay, so you go. You just a minute. Because I think if you're accessing KRA from outside the office, seems like you can't access some certain environments. Please check that. Okay. So we continue. You capture the PIN number. Even before you go there, maybe let two things. On the KRA website, I think I was somewhere on the website at some point. Go to the KRA website. Under the website, the returns are also available under publications, and I know the communication we sent out also had some of these links. So you can go to the KRA website under publications. That's where we've also hosted some of these returns and the CSVs. And I know some of these are probably having issues from the website. I've been pushing my website team to deal with this. But when you go to the KRA website under publications, maybe you go to page 2, you should be able to see the pay returns and the CSVs if you need to access them. Maybe you can use different browsers. I believe maybe either Edge or maybe Chrome. Maybe can because I know yesterday I tried Mozilla, but it got some entries in a Notepadish instead of an Excel CSV. But anyway, you can still get some of these CSVs from any of our nearest KRA, whether they sent on our social media platforms. They can share with you where applicable. You can also get them from your account managers. We already did them as early as early as possible. I think April or May thereabout. So they have them and they can share with them the CSVs where applicable. But the return can be downloaded. I think the CSV is the one which has an issue on the website. You can go back. Once now you have the return, you can fill the return, come and select the entity type as a head office. The return period, you can capture it as today is July. Okay, so to 31st. So the same aspects of type of return and type of entity type, those have been maintained. Then there is a question. I saw someone asking that I'm trying to file Fringe benefit, but I cannot see the tab. Of course, what had they done? They had not said yes to this question. So if you're having Fringe benefit, you're having Lumpsum, Gratuity, and Arrears, please select yes to this question. The return will open the other two different sheets, which are rarely used by most users, and that's why we've hidden them to just give again the few ones who need them to access them. But the ones who don't need them, they should be able to file by just not seeing them on the pay return, but not this question. So when you say yes, it opens up sheet C and sheet D. And of course, sheet C handles Lumpsum, Gratuity, and Arrears, and D handles Fringe benefit tax. Okay, so we are done with the information where you capture the details. You come to the employee details quickly, capture the PIN of the employee. So that's the PIN of the employee. But let me just capture a line item, then probably I'll come and import a CSV later. So you can capture the name, the resident status. It's either resident, so again, mostly a resident, but in case you're having a non-resident employee, by the definition of non-residents of that status, please align accordingly. Then the type of employee, we have primary or secondary. Again, these are application on the tax employee, the return going to apply in addition to whether employee is liable to certain deductions like personal relief and even insurance relief. So again, for primary and secondary, they have those. When you this, of course, a secondary employee is restricted in a certain way. Then we come to persons with disability. Maybe let us stop a small stop there, and we go back to the old template. The old template had about 15 different sheets. While this one has a maximum of 5 sheets, the old template had 50. Those were quite many. And the old template, we had a sheet B for employees. We had sheet for employees who are persons with disability. So 2 different sheets just to take care of the employees. In addition, we had the Lumpsum, the Gratuity, the Arrears, 2 sheets for us. We had affordable housing levy on its own. We had a payment credit sheet. We had quite a number of sheets. So all of them have been either done away or merged. And that's why for our new sheet B, we have merged both employees who are persons with disability and employees who are not persons with disability. So again, you realize now that's why we are having this new flag or this new column. We are being asked, are you a person with disability? If you say yes, it allows you to, when you say yes, it opens up the section for you to capture the a valid exemption certificate number. If you know, you proceed without it. So again, just note, that is why, so please don't look for the other old sheet, because there are no other sheets. These are the only sheets which are there, and they are sufficient. They'll be able to take care of all scenarios possible. So we come to total cash pay. Now, the changes we've done again, and allow to keep relating to the old template so that you can appreciate the changes in the new simplified pay return. We've done away with the breakdown of the cash pay. So again, going forward, KRA will not be requiring an employer to declare the breakdown of their total cash pay of an employee. You can maintain it in your payroll system, that's fine. We are not saying do away with it in the payroll system. So your payroll system will have the breakdown the same way KRA's payroll system has a breakdown of myself and Mendy's salaries. There is basic salary, there is housing, there is transport or commuter, there is overtime for months probably I'm going on leave. There is leave maybe for the months I'm going on leave. There is overtime, there is a director, there is all manner of cash allowances. So you can maintain them in your payroll system. But when it comes to filing the return, please merge them to just the total cash pay, because that is what KRA is interested forward, and not the breakdown of your the total cash pay. So you'll bring your total cash pay, which is a summation of the different basic housing, commuter, over leave, director fees, all those are under total cash pay. Then, of course, now we are done with total cash pay. We now start section on non-cash benefits. So you realize non-cash benefits now start immediately after the cash pay, and the non-cash benefit we are having those main the four main ones. We have the car benefit, we have the value of meals, we have the non-cash benefits, and we have housing. But of course, we added another one called other benefits, explaining the reason to why. So of course, value of car benefit is for the employers who have provided a car benefit to an employee, whether it is hired or owned by the employer. So again, and of course, the rate is at the rate of 2% of the cost of the vehicle. All the higher of the 2% of the cost of the vehicle, the cost of hiring, or the commissioners are prescribed rates. You can always refer to the PAYE guide, which is on the website also, and also even the old template. We'd already inbuilt the prescribed rates to determine the value of car benefit under the old sheet D of the old template. So again, so that is on the value of car benefit. The main change which is happening now is for the ones who are providing benefit to the employees, we no longer have a sheet calculating car benefit for you. So you can either reuse the template in the old PAYE template. For those of you who have already embedded this in your payroll, you can use your payroll to calculate that. For us, we just need you to bring the actual calculated benefit for that employee. So value of car benefit calculated as either 2% of the cost of hiring, or the cost of the 2% of the cost of hiring, the 2% of the original cost of the vehicle, or the cost of hiring, the higher of, or the prescribed commissioners rates, which are also provided in the Income Tax Act and also in the PAYE guide. We come to the value of meals. These have also been there, but now, of course, the maximum allowable limits have been increased. So value of meals is where the employer provides meals to the employee. Could be maybe through a third party, there is a cafeteria, or the employer himself has a kitchen which cooks ugali and feasts somewhere in the back end for employees to take. So again, on that, if that cost, of course, the employer will claim it or will do other things with it. The employees, of course, will be charged that bit if it is above 5,000. So for value of meals, if this value of meals provided the employer, the cost goes beyond 5,000, then the employee is going to be charged on the incremental amount of 5,000. For value, in case this person was given meals worth 10,000 by the employer, what they're going to be charged is 5,000, because the first 5,000 is not taxable, or rather, it's I don't know how you look at it. Up to the first 5,000, the meals, the commissioner says it's okay. That is I can deal with. I can allow you anything above 5,000, the incremental amount above 5,000 for value of meals, it is taxed now employee as a non-cash benefit. Now we come to other non-cash benefits which are not meals. This could be maybe you are working for a company manufacturing paint. Every week you get given some 2 liters of paint to go with, or every month. Those are some of the non-cash benefits. A software company, maybe someone does soft drinks or they do drinking water. Maybe they manufacture alcohol. They also so basically you are being given benefits from by your employer. You are being given things by virtue of the employment, which are non-cash in nature. Separate airtime from this one. Airtime is a bit different, and we've provided for it in a different column. So non-cash benefits, if they're above, the same rule is the rule for non-cash benefits and value of meals is a bit different. For non-cash benefits, if it goes beyond 5,000, then you are taxed in full. So that's the difference between cash benefits under column J and value of meals under column I. Under column I, value of, we tax you on the incremental amount of 5,000. But for the non-cash benefits, if it goes beyond 5,000, you are taxed in full. So again, same scenario. If you're having 10,000 worth of non-cash benefits, here you'll be taxed on the full 10,000. On the value of meals, we're only going to tax you on the extra amount above 5,000. So again, just get the difference, and to avoid you being in compliance, run into some compliance headwinds with KRA on such aspects. So get that on non-cash benefits, you tax the employee in full if it's above 5,000 from 2024 going forward. Before that, it was 3,000. So anything above 3,000 was being taxed in employee. On the values from December 2024 forward, you pick the incremental amount above 5,000. Before December 2024, it was 4,000. So again, just note the different threshold. Now we come to housing. Those are the different types of housing you can provide to employees. Most of us probably with the benefit not given, but in case it's an employer's own house, you'll get the housing benefit as provided by the Income Tax Act Section 5 and bring just the housing benefit. So again, these are another big change from the old template. In the old template, we had about 5 columns to just help an employer calculate housing. But those 5 columns were only being used by 2% of the economy. So 2% employers in the economy were making 98% of the employers in the economy to see their calculation on something which they don't need. So again, it was, and I think this simplification is a give and take exercise. We are asking ourselves, do we really need this column? Is it needed for everyone? Can the few people who need it do it in a different way? Can we provide a calculator, a totally different computation outside the pay return for some of these guys? So it was a give and take to arrive at a desired simplified state. And of course, some people might be affected. I believe those people are providing housing to a good extent. Some of them should be able to afford to calculate some of these. It's basically, for me, it's an assumption probably that be able to have the capacity to housing benefit offline. If you're an employer who can provide housing, and also you can provide a cap benefit to employees. But either having said that, in case you're still having challenges to calculate housing benefit, you can reuse our old template, which is still available on the one you already been using. You can download and reuse it to just arrive at the housing benefit for the employees and pick the net value of housing and bring it here. So again, and of course for employers own house, the employers rent house, the agricultural farm, all those things, please be guided by the calculations which have been provided and arrive at the correct value of house. For myself, I'll go with the benefit not given. Either I'm staying in my own house, I'm staying with my parents, I'm staying with my other loved ones, or I'm staying with or I'm paying my own rent. So again, benefit not given. Okay, we come to other benefits. We provided this column for other benefits. Initially, it was not there, but again, due to feedback from the change management sensitizations we've been doing for March, it was deemed necessary to have the other benefits column provided to take care of of some of these scenarios. So again, on other benefits, the following should be captured under other benefits, but it can be any other thing. But let me just give you the reasoning behind the other benefits column, but you can reuse it for probably something else I've not captured and probably it's still applicable. The first scenario is when you're providing some certain unique non-cash benefits like the provision of domestic funds and water and electricity to employees. Those ones, you can't reuse the non-cash benefit. They don't have a limit. So whether it is 2,000, as long as it is a certain amount, a higher of, in case some, I think there is a commissioner's prescribed limit. As long as it's you pick that amount, you tax the employee on that. So again, you can't come and say it is less than 5,000, or if it's above 5,000, you tax those provision of domestic servants, provision of water and electricity. I don't know if it's still applicable. All those benefits, those other type of unique, other unique non-cash benefits, you'll come and use this template, rather this column and not column J. So it will be column M being used and not column J. The second is those employers who are providing air telephone benefit to the employees. As per the PAYE guide, it has provided that 30% of the telephone benefit should be considered private cost, meaning it should be taxed on the employee. So when your employer is providing you the postpaid line sorted, paid by the employer, your employer is loading airtime directly to your line. Employer is providing scratch cards to you guys for the sake of facilitating work. Of course, we all know probably even 30% is in the lower end. I don't know if it should be changed. There is always a tendency of using employers' resources more. Okay, maybe let me speak for myself. I think if I'm having a line provided by KRA, there is a higher chance that that's the line I'll be, when I'm calling people, even I'll be taking 5 minutes to just say greetings. It's like, hey, how are you? How are you doing? As in, you'll take 5 minutes for the greeting side because there's no worry on airtime. So there's a tendency, and I know some people are agreeing with me through emojis. Thanks for being honest. We will do that most. We'll use the employer's line to call our loved ones and earn more bonga points than probably even the clients we are supposed to be calling. But anyway, it's human nature. Okay, not all of us. I know some of you are very strict, but some of us we've accepted our limitations. So again, so you realize that 30%, the KRA came and said 30% is private cost. Probably we should go to 70% is private cost and 30% is employer. But anyway, so you that and you bring it to capture it in this column. So once you calculate the 30% of 10,000, maybe your paid your postpaid line, the employer is 30%. Then of course, if you arrive at 3,000, you cannot again say is the 3,000 higher than 5,000. That's why this column has to be a bit different because it doesn't have those maximum prescribed limits of up to 5,000 and above, like for the ones for column I and J. So again, and of course the third scenario is myself. Maybe let me use myself and Mendy. If you're working for a tax exempt employer, most likely government, this could be NGOs who have tax exemptions. This could be the counties, the ministries. Of course, government in itself, you don't expect KRA to be given some money by Treasury to pay salaries, to pay rent, and again, KRA pays corporation tax on the funding is being given by government. It doesn't really make a lot of sense on that aspect. On the aspect of the income tax side, Treasury gives KRA, let's say 20 billion to run its affairs for the whole year. But again, KRA needs to pay 30% of the 20 billion. Of course, it doesn't really, because the money they're being, it's not really, it's income to KRA, but it's not that it is really income liable to tax. So when you are such an employer who is with the Act refers to it as a tax exempt employer under section. If you are such an employer, the Act has provided that when you contribute pension, when an employee contributes pension and the employer comes to contribute also another portion of the employer's contribution as pension, and these two amounts go beyond the maximum prescribed rate, which currently is 30,000 per month, then the excess pension should be taxed on the employee. So again, that is the other reason why you need to use the other benefits column for that third scenario called excess pension. So the first scenario was other unique non-cash benefits like domestic servants, gardeners, DMs, issues to do with electricity, furniture being provided by the employer. The second scenario was telephone benefit. The third scenario is excess pension. That's the major three scenarios I can think of which you can use the other benefits column. But you can still use it for other things if they deem fit. But those are just some of the unique things I needed to bring. So for myself, let's assume myself or Mendy, we are contributing pension of, let's say, 20,000 per month. The employer and adds another 20,000 per month as pension. So that comes to 40,000. But the maximum prescribed limit is 30,000. Income Tax Act says when the employer's contribution, when added to the employee's contribution, it goes beyond the maximum prescribed limit of 30,000. The excess pension of 10,000, which is 40 minus 30, it's on the employee. So that's kind of how that aspect works. So again, it's good to give clarity on that. So we come to the total gross pay, which is 540. Okay, I've added the return calculates, of course, depending on what you're capturing. Then we start the allowable deductions. Allowable deductions. Of course, I wanted to just have one column for allowable deductions and also have one column for non-cash benefits in case we are really pursuing simplification without looking at how it interfaces with other processes. But of course, the commissioner will have lost visibility of so many things. So again, I think some of the simplifications that have done even better simplification in the world, they have also just come and deduced some of these countries that even, I think even Mauritius and I think even Singapore, they have come and deduced the allowable benefits and contributions to just, they have maybe just come and given you one allowable deduction of a certain amount and also probably one allowable non-cash benefit maybe as it. So their payroll, their payee provisions, they have really limited the number. But of course, for us, we have quite a number of deductions. So again, we can only do simplification based on the cloth we are wearing, even if we have this better cloth. But of course, once we acquire that better cloth, we'll cut it to size again in line with what we wish. So again, we have quite a number of allowable deductions, which are unique in their own nature. And of course, merging them or combining them will have lost meaning and even exposed, maybe lead to other non-compliance issues by certain employers, probably willingly and unwillingly. Yeah? So again, so we come to shift. So your social health insurance fund contribution is now an allowable deduction. Maybe let me use a perfect scenario now. Let's go to the calculator. I know I've been using dummy figures in the past, but let's use maybe, so we come to 545,000. We multiply by 0.75. So yes, it comes to around 14,987, maybe 88, 14,000, okay, what has happened? 14,988. So I'm assuming this total gross pay for KRA purposes for payee is still the same base for shift, but we realize due to certain amounts, of course, people ask you, why are we not auto-calculating? I'll have loved to auto-calculate shift and affordable housing levy using inbuilt formulas if we'll already have agreed that this is the amount we are using the same. But you realize, as much as the social health insurance, the legislation for SHIF or SHA, as much as it mentions gross salary, and also the Affordable Housing Act mentions gross salary, you realize we have come to know is their gross salary cash pay plus non-cash. So I think probably the three organizations need to really probably KRA, SHA, and Affordable Housing Board. They need to align and know what is the base we need, and we come up with the correct base. If you do that, by the way, I honestly believe if to calculate some of these benefits even on a lower base, I think you might end up collecting more taxes for shift and affordable housing levy if the return auto-calculates it using certain values, which probably, again, the employer cannot easily play around with it. especially probably the ones who are not compliant enough. So again, so yes, calculate, hey, why are people crying, Bana? This person is earning 545,000. So 14K is nothing, Bana. It is the lunch you'll take at Serena. Anyway, so you come to an SSF. So you calculate an SSF contributions. I know there have been questions on tier 2. Please note, KRA is not the, KRA does not, KRA, we are not determining tier 1 and tier 2 in our return. For us, we are looking at NSSF as an allowable deduction. So the rules behind tier 1 and tier 2, those are, do them on the NSSF portal when you're filing the return to NSSF. For us, we are not breaking down tier 1 or tier 2 for NSSF. Once you've calculated tier 1 and tier 2, you bring them as the employee's actual contribution, and you capture it now as an amount, maybe even use 10,000. So please note, we are not breaking down tier 1 and tier 2 on one. For us as KRA, we are only concerned with the employee's actual contribution, which includes, of course, both tier 1 and tier 2, or even tier 3, wherever, if it's there. But for us, we are not breaking down on the side of KRA. Then we come to other pension contribution. So we separated NSSF being a mandatory public pension scheme with other pension contribution due to reasons also within KRA visibility, reporting purposes, and just trying to inform better reporting and statistics both to KRA and to the government on just what are these NSSF contributions employers are providing on the KRA side, and also probably what they are providing on the NSSF portal. So again, a one of government approach. Again, if someone wants to see what are the NSSF contributions being uploaded on the NSSF portal for employers who have pay obligations, vis-a-vis the ones which are, I think they can be able to do those comparisons and drive and draw some, make better decisions going forward around pension. So other pension, like myself, and again, we are contributing to the KRA pension scheme because probably we are pensionable employees for KRA. So again, we'll come probably and do another 20,000. I was just like using the other example I used for excess pension. So again, what happens is we'll only allow you a maximum of 30,000 for both column P and Q. So we'll add them in the back end, but still provide you a maximum of 30,000 because that is the maximum allowable limit for pension. Then we come to the post-retirement medical fund. As you approach your sunset years, the government wants to incentivize, to give you incentives in a way that you can be able to save towards a post-retirement medical scheme. Of course, those of us who are working for, and we are lucky and to work for employers who probably provide a very good medical cover, of course, we can take it for granted that it is there, but you realize you retire at 60 or whichever retire, that is where you part ways with your good medical cover for the employer. So, and that's why the government with an incentive to encourage employees to save towards a post-retirement medical scheme through this post-retirement medical fund, where you start contributing towards this scheme when you are still in active employment. And then when you retire, you can now procure a medical cover to cover you in your retirement. And of course, it depends on how much you've contributed. Then it will determine what type of cover you will get at the point once you've retired. And it's a good thing, I think, for everyone you can. However little you can, if you are able, please, because on one side, it's more of a saving scheme. And on the other side, it also ensures your sunset years, you have a better medical cover. And of course, by extension, you should probably have a higher life expectancy if all other things stay equal. And again, of course, so you can save towards it. Maximum allowable limit is 15,000 for tax purposes. So even if you are saving more than that, for the sake of the return and everything, we only pick the 15,000 to determine your taxable pay. We come to mortgage interest. This is the interest where you have your owner's occupied house. You are staying in your own house. It can only be one house, guys. So again, even if you have 5 houses, you cannot claim more interest on 5 houses. You cannot separate yourself 5 times and sleep 5, unless you are saying I'll sleep 1 hour in house A, 1 hour in no, that is not what the commission is looking at. So you only be given one mortgage interest for one house where you are staying, and it's not the house where you are renting. It's not the house for a this is the house where you are staying. So it's the house where you're staying with your loved ones, with your family, or yourself. So the interest is at the rate of 30,000 per month maximum, and it's on the interest amount, not the repayment amount. So if you are repaying, let's say you are doing a mortgage repayment of 50,000, 30 is the principal tax, 20 is the interest. It is the 20 which is now going to be allowed as a mortgage interest. And of course, we cannot overemphasize. So you can even capture something more, but what will determine your taxable pay will be a maximum of 30,000. And of course, now we come to the affordable housing levy. These are the rate of 1.5% of your gross salary. So my example I was using, it was 545,000, which was the gross salary. Using that as an example. So let me come again to 545,000 and do 0.15%, 8,175. I think in future trainings, I'll try looping the guys from the Affordable Housing Board to just come and let you guys know some of the, I think, a gap in the awareness on, yes, I know it is mandatory for everyone to pay affordable housing levy, but I think there are also so many benefits which we are entitled to, which probably an average employee may not be aware of. Things like you are entitled to a low interest mortgage of 9%. Again, as an employee, you are entitled to some of the houses which are coming. I think in the next training, we'll try bring them on board, because anyway, it is mandatory for everyone. So the least we can do is you probably understand the benefits around it, so that until the day probably it is probably done away with, or something is amended. But for now, I think it will be good for you to understand some of the benefits, because you are still paying it. Okay, the emojis are so now something else. I think just to tie back to what Mendy had done. Mendy had mentioned something to do with the liable. Mendy mentioned that the Finance Act 2025 provided that it expressly told employers, please provide all the reliefs and to employees. So you realize this section is very important to employers, that they need to provide all their liable deductions and relief to the employees as in line with the Finance Act 2025. So please focus so much on this one, because at the end of the year, when you provide all these benefits and relief to employees, they end up paying less PAYE, and at the end of the year, they will never be in a refund position. So the government is killing two birds with one stone. On one side, the government is providing a higher disposable income to the employees, and on the second side, the government is avoiding the aspect of paying refunds at the end of the year, because the employer has already provided all these benefits to the employees. So encourage employers, please give all these benefits to your employees, so that they end up paying less PAYE. At the end of the year, there is no aspect of refunds going forward. Then we come and capture the personal relief, which is 2,400. Then we come to the insurance relief. The insurance relief is now where it can either be life, it can be health, it can be health or education. I know this health insurance policy is the one which confuses people. Please note, SHA is not part of the health insurance relief which we are currently working on. The Income Tax Act is very clear for SHA. SHA, as much as it's a form of a health, it's related to health, it is not part of the insurance relief for health. Please note that SHA is an allowable deduction. So please don't go ahead, give your employees an allowable deduction for the shift contribution, then again come and calculate another relief for them. No, that is not in order. That is not supported by the law. And of course, if KRA realizes that, it is the employer to be at fault, and corrective action will be taken on employers who have provided and supported reliefs to employees. So please note, SHA is not part of health. SHA is an allowable deduction. But anyway, any other health policies you might have, any other life and education policies, what you just need to remember is education policy, it must at least have a maturity date of at least 10 years. So again, if you are procuring an education policy, please you pick one which is 10 years and above, so that it allows you both as a saving scheme towards your child's education needs, and also it the insurance relief. If you pick one for 9 years, you lose out of the insurance relief. That is just basically what it means for education policy. So ensure it's at least for 10 years. And also as an employer, when an employee provides with an education insurance certificate, especially, and of course, these policies, we're expecting them to be deducted through the payslip. So these policies where you are being given relief, we are expecting the deductions to be done through the payslip, because that is the only time the employer will have full visibility of an employee's payment. You could have already stopped something in February, but your employer has continued to give you a relief. So again, these are the policies. For the rest, I think you can still get your relief at the end of the year. You'll be among the few people now KRA will be paying probably refunds at the end of the year around these aspects. So again, we come to the amount of insurance relief. Calculate 15% of the insurance premium. Then you come to this and you arrive at the 25. Of course, you capture the self-assessed pay, which for sure will always be, it will always be similar to ours. If you're having a different self-assessed pay and it's not a rounding off error, please question yourself first, because most likely it is your payroll system or what you've captured is most likely at fault even before you consider the one which is faulty. I like this advice I'm giving you for free. If you're seeing your self-assessed payee is different from the pay tax, there is a higher chance that you're the one who has got it wrong more than the return. So it's always good to align. Then, of course, but in case the return has got it wrong, you can still go and capture the correct self-assessed payee. My experience in iTax for the last 12 years, all those cases people have brought to me about changes in payee, it was more of them who have calculated the payee wrongly rather than the return having calculated the pay wrongly. Okay, go now to, I think I've captured sheet B conclusively. I can import a CSV. Let me go and try import a CSV to just see how it works. I can import a CSV of a sample for 10,000 employees. We can start counting. It's 20. Let's see how long it takes to import a CSV for 10,000 employees. So you can do your CSV offline and still come and import it. Okay. 10,000. I think I'd opened the CSV already. Okay. So you're still 1003. Oh, in less than how many the people were counting 30 seconds. We've taken 30 seconds to import a CSV of 10,000 employees. Again, the performance of the return is high. It's good. It's better than the old template for sure. You can import, and for this return, we've increased the maximum limit of a CSV from 60,000 to 100,000. So again, this return is a better return, not just for simplicity, but even for performance purposes. Maybe towards the end, I'll go and import 20,000 as we maybe do and see how long it takes, and maybe even go to 30,000 just to push, because I know we don't want to hide. The return is working perfectly and we have faith in it. So we don't want to come already imported 10,000 and maybe you guys will go through a lot of challenges around it. Okay, let's go to sheet C because of time. And yesterday we had a lot of questions for gratuity, and I hope you guys will be keen, because I'm going to handle issues when I'm handling sheet C. Aspects to do with gratuity, is it exempt, is it taxable, and all those scenarios around it. Okay. Now, again, first things first, capture the PIN of the employee. By CSV, you can bring it. Resident status, you can capture. Type of employee, you can capture. So the sheet C is totally different from what was there before. And this sheet C is merging anything to do with lump sum payments, anything to as severance pay, anything to do with arrears. All of them are in this sheet C. So please note that. Don't say that the return does not have a section for arrears or no, all of them are here. And then later you'll see how the aspect goes. We go to type of payment. 3 types of payments we provided to just separate. We have the lump sum payments relating to contracts. We have payments relating to gratuity and severance pay. Please note, KRA I think when you go to the pay guide, KRA, gratuity and taxation of and severance pay as one and the same thing. So if you even go to the examples in the pay guide, which I'll request any employer to go, because it's a very simple example. It has been explained in a very simple, but that is basically, again, what the return has delivered. So again, you can, so gratuity or severance pay, we'll always use them interchangeably. It's the same for us. Then arrears. Arrears, of course, I'll also explain as we go by. Let's go to lump sum payments quickly. These are the lump sum payments relating to contracts. Now, we have three types of contracts. Contracts where it provides, it's for a fixed term and it provides for compensation. Now, these are the three types of contracts as per KRA, not the contract law, not contract law or any other legislation. These types of contracts is related to how KRA views taxation of lump sum payments relating to contracts. So we have three types of contracts. A contract for a fixed term, or let me use for a specified term, and it provides for compensation. That is contract number one. And KRA has provided to in a certain way. Then we have the second type of, the second scenario, where it is a contract for an unspecified term, meaning the contract that has not determined for how many years and for. So the term of the contract is unspecified, but it still provides for compensation. So the first one was specified as for compensation. The second one is unspecified contract, but provides for compensation. The third scenario is unspecified contract and does not provide for compensation. Those issues have been disturbing a lot of employers over the years, because we've been seeing a lot of workarounds around Section F, because it could not bring out these scenarios in the best way possible. And that's why any employer will use Section F had to use a workaround, go calculate something, come and capture it somewhere to arrive at the correct payee. Now we are saying no more workarounds. The return will do much for you, calculate for you the payee depending on the scenario. So let's go to the first scenario, specified term contract with compensation. What does the Act say? It says that when an employee has a specified term contract and it provides for compensation, when the employee is paid, the amount paid, the compensation is deemed to be taxed on the, it's basically taxed on the unexpired term of the contract. So you have a contract for your remaining term. The contract is terminated on year 6. So meaning your remaining term in years is 4 years. We have the lump sum amount as 10 million. Then what do we have now? We have 10 million as the lump sum amount. What does the Act says? We'll tax this 10 million on the remaining term of the contract. So if the contract was terminated in this year, 2025, we are going to tax this contract. We are going to divide the 10 million, divide by 4, and spread it and tax it 2.5 million, 2026, 2.5 million, 2027, 2.5 million, 2028, 2.5 million, probably 2029. That is basically what the Act provides. And that is what they're doing in the back end. So we are not going to require you to capture this employee 4 times. That is probably what will have happened before. We are not going to require you to capture this employee 4 times. The return is going to calculate in the back end the payee. You calculate the year, which probably the contract termination is relating to. The return is going to calculate the payee in the back end and arrive at the payee. Mathematicians, you can go to the online letter. You can still go to the online payee and just try do this and see if, but we believe, but again, we allow you, because we are in the era of self-assessment, we allow you to come and still capture what you might have arrived at. But again, if something you've arrived at is different, please note the rule of thumb is always determine where the discrepancy is. So that again, this is what this person is going to pay as the payee on being 10 million to this option of the contract. Okay, we go to the second option, the second contract, and specified term contract, but still provide for compensation. What does the Act say? The Act says that when you are in this, any compensation you are being paid will be spread forward using your current annual remuneration. So again, what does the payee what does the income tax, what does the payee requires? The return to cover the 10 million. What is your current annual remuneration? Let me use the same amount so that we remain to 4 years and see if we arrive at the correct payee, because we ideally we should still arrive at the correct payee, the same payee for the first scenario. So let me say my current annual remuneration is 2.5. Again, we are spreading it forward for 4 years. The year is 2025. Are we going to 2749? We should have the same. Yes, you can realize the same payee because it's the same concept. We are taxing in future. And when you are taxing someone in future, you use the current rates. So, because the future rate, we don't know what is the pay rate for 2028. So when you're taxing someone in future, you use the current year's rate and you tax them going forward for there. So again, the same scenario will come to that. Okay, let's go to the third scenario. And specify term contract with no compensation. What does the act says? It says when you're having a contract, when you've been employed on a when you have been employed on a contract basis, and it does not have a term, it doesn't specify the term, neither has it provided for compensation. The act says that we will tax you we'll spread forward the compensation on the next 3 years when we are taxing you. So again, same scenario. Let me maybe come to something like 9 million so that we spread 3 million per year. Then we select 2025. Then the return calculates the payee. Again, that is just it on so we've tried to inbuild formulas and make it easier for you that you don't need to the employee 3 times, 4 times, or 10 times to just arrive at the correct payee. What we've done is we've invested heavily in the back end of the return to have more formulas for you to make your work easier on the front end. So again, we move back to, we now go to gratuity and severance pay. It had a lot of questions yesterday. So please tighten your belt. Myself and Mendy, we are cruising at 39,000 feet at above sea level. So try with the pilot and we'll take good care of you on this aspect of gratuity and severance pay. Okay, so the gratuity and severance pay, lots of questions yesterday and even in previous trainings. So let's start. Gratuity and severance pay, it's a form of lump sum payment related employment. It is different from pension, and also it is different from the one we've just covered relating to contracts. You may be a permanent employee and pensionable, not pensionable, but permanent employee. But on contract, I'm a permanent employee. I'll retire as and when I reach the retirement. There is no contract in between. Of course, the Employment Act has come in to determine how employers should determine the amount they pay to the employees. It's not KRA. KRA will only come to tax what the employer has arrived at as the gratuity amount. As we are not the authority to ask to take that you must pay this person 10 million. That one has been defined in the Employment Act. So once the employer has calculated gratuity, whether is it normally I see mostly is it 30 or 30% of your annual pay multiplied by the number of years. I think that is almost the normal calculation, but we have different versions for the people who are paid on a weekly basis. I think even we have different versions for people who are paid on a daily basis. But let's say you've already arrived at a gratuity amount. Now, scenarios for gratuity. That one, the one I'm already explaining, is the second scenario of a gratuity payment an employee. So let me start with that one. Then I'll come to transfer of gratuity to a registered pension fund. Gratuity payment to an employee. So even before you come to determine whether it is taxable or not, you must calculate the gross amount. So you calculate the gross amount of gratuity. You come and select the year. Let's say the full year worked is 2024. You realize gratuity always spread backwards up to a maximum of 5 years, up to the maximum of 5 years. So it's spread backwards up to untaxed it's spread backwards and taxed in the, compared to lump sum spread forward, gratuity is spread backwards. So I think those are some of the key differences between the two. And of course, gratuity can only be spread up to a maximum of 5 years. So we come and say 10 million was the gratuity you are being
paid. Sawa. Gratuity years, of course, the first year is 2024 of full year worked. If you are being paid, let's say, gratuity in this year, most likely you're not going to use 2025 bets. So you'll spread it backwards on 2024, 2023, 2022, 2021, probably 2020 as the last year. Now, the gratuity years, let me assume the gratuity years are in month. The gratuity years are in, we have 10 years. So you're having spread per, we're having the spread per year. Yes, it is 1 million. Of course, now for this scenario, this is the only scenario will require you to capture this employee 5 times. So you will come again for this scenario of gratuity payment to an employee. Is the same scenario, is the only scenario he to get the arrears will require you to capture the employee, because we realized there are some other aspects. It was not feasible to calculate it in the back end because your previous salaries, the amount of income you're earning here and the other year could be different. So again, it was not very easy to, we'll have wished to calculate it on the fly, but will not have managed it to get it right for all scenarios. So you'll come and capture this employee again, now 2023. Of course, capture the same amount. Okay. So the amounts remain the same. The amount you are being paid is the same. The years remain the same. It's only the year, and of course, the spread remains the same. So again, you'll continue that up to 2020. So you'll capture this employee 5 times because the gratuity is more than 5 times. Gratuity years was only 2 years. Let me go back maybe here. If this gratuity year is only 2 years, then you'll only need to capture this employee twice. But because it's 10 years, it means the spread will be done in the last 5 years. So that's why you'll need to capture maybe this more than up 5 times up to. So you continue that. So let me continue with these 2 years. Then the taxable pay per month or year plus excess gratuity. So this column, you will now come and capture what did this employee earn in 2024 as their taxable pay. Not their pay. Please separate the two. We are requiring you to capture the taxable pay they earned in 2024. So you come and maybe capture 2 million. Okay. The zeros now, they're not. Okay. Maybe let's say 2023, maybe they were earning 1.8 million. That is the taxable pay for the full year. Where can you get it? You can get it in their payroll. You can get it in the P9. You can get it from in any other system which has. Then we'll now come and add the 2 million to the 1 million. And what happens? What will happen when you add the 2 million to the 1 million? The spread is 1 million, which is 10 million divided by 10 years. We arrive at 1 million of the spread, which is being spread backwards up to a maximum of 5 years. Of course, on the year 5, we expect to have 6 million on the spread because it's 1, 1, 1, and then the balance is fully declared in the 5th year. The taxable pay is 2 million, so we add 2 million to 1 million, and we calculate the payee on the back end. So you're not seeing the total, but we are adding 2 million to 1 million, and we are calculating the payee on that new spread. Of course, we allow you to deduct any payee which you pay 2 million, which is probably, let's say, 700,000. So on your taxable pay for 2024, you already deducted pay as you earn. On the taxable pay of 1.8 of 2023, you already deducted some pay as you earn. So we allow you to come and remove that tax which was deducted on those 2 things, the tax deducted for those respective taxable pay. Then, of course, we are now going to effectively arrive at the extra payee, and then that's now the amount you are going to calculate. And of course, you can always calculate this offline and confirm that also the formulas are working well. We'll be glad as KRA to always update the formulas in case there is a scenario which we are not calculating correct. So that is how you go calculating tax on gratuity on when you are making the actual payment to an employee. Of course, the other scenario, I'm now coming to finance tax provision. At least you need to understand first because most of the gratuities you guys are paying now, I don't think they will be affected by the provision in the Finance Act. So again, so you come to the gratuity. Now, the second scenario of gratuity is when you are making the transfer of gratuity to registered pension scheme. Before December 2024, any amount you are transferring as gratuity to a registered pension scheme on behalf of your employee, up to the first 20,000 per month or 240,000 per year, it was not going to be taxable. So meaning if you are moving gratuity of less than 20,000, and of course, it was being tied to also the prescribed limit for pension, the tax exempt, the amount which is not liable, the amount which is basically liable for tax purposes, contributing pension was 20,000. So almost the same amount was also being used on gratuity. If you are moving the gratuity registered pension scheme up to 2024, it was 20,000. From December 2024, it is now 30,000. So if you're moving any amount to a registered scheme on behalf of the employee, every up to 30,000 per month, it is not taxable. Anything above 30,000 is the one which will be taxed on there. We should be taxed now as an amount. So when you select that, you select the year again. You can say 25. Because now this one, you're moving it in the current month. We can say maybe you're moving 100,000. 100. This is per month. The gratuity picks the spread per month, and you realize it auto calculates the taxable pay, which is 30,000 per month, to come to 70,000. In case there is need to add any other emolument the month to arrive at the correct tax rate, you can always come and add this, maybe even take it to 200,000 if you need to. But you arrive at the correct tax rate for that excess gratuity you are moving. So you can come and capture your salary together with the excess gratuity. We can still allow you some pay on the gratuity, on the taxable pay you've just introduced, maybe of 60,000, just using values. Then, of course, the return will remain with the excess gratuity which is being moved to the registered pension scheme, which is now that is the amount. So again, so that is on the transfer of gratuity to a registered pension scheme. But now, for this first scenario, you might start looking, employers might start getting the benefits immediately, because let's come to the taxation of employment income. Employment income is taxed on an accrual basis. So I know accrual and cash confuses a few people, but let's say in a layman language is employment income is taxed using the rest. Employment income being taxed on accrual basis means we look at the period the gratuity is relating to, and we use the rates which are applicable for that period. We don't look at the period you are paying the gratuity. So let's separate the two. So if you are making payments if you're transferring gratuity, if you're transferring gratuity to a registered pension scheme, and we are going to make these changes to the return, I've already seen what we can tweak to make it easier for you, especially on transfer of gratuity to a registered pension scheme. If the period is July, because we are using the July period, if the period is July, then we are saying it is exempt, because effective 1st July 2025, any payment of gratuity to a registered any payment of gratuity is exempt from tax. But we don't need to look at payment. That's why we are opening it up that the gratuity you are making the payment to must be for a period which is beyond 1st July 2025. That is now the difference, because we've seen some employers have misinterpreted that law. We're not saying all gratuity payments after 1st July are exempt from tax. No. What the law is clarifying is, because gratuity is tied to tax period and employment income is taxed on an annual basis, and we still need to make reference to the tax period. Basically, we are telling you, if you are making gratuity payments to an employee after 1st July 2025, the next question you need to ask yourself is is this gratuity is relating to which periods? If it is relating to periods before 1st July 2025, you are expected to charge payee and deduct and pay KRA, because the gratuity period is before 30th June 2025, and already taxes are paid on an accrual basis. So meaning that income or that gratuity amount, even if you are paying it now as a lump sum, it had already accrued taxes. So please note the difference. You are making gratuity payments in yourselves. Which periods are they relating to? If they're relating to any period before July, you'll deduct payee on the gratuity and make payments to KRA. Now, go to next year. Let's assume you're in January 2026. If you're in January 2026 and you're making some gratuity payments to an employee, and part of the portion of the gratuity is relating to the year of 2025, this is what is going to happen. The portion relating to gratuity between January and June 2025, it's still going to be taxed. But the portion relating to gratuity for the period July to December 2025 is the one which is going to be exempt. So please note, you need to tie the gratuity amount to the period to determine whether the gratuity tax is payable or not. So don't say we are paying gratuity in July, we don't deduct. No, ask yourself, is the gratuity being paid from 1st July? What periods is it relating to? If it's relating to periods after 1st July, well and good. If it's relating to periods before 1st July, you need to deduct payee and continue paying normally until the point where the gratuity periods for the gratuity payments you are making will now be after 1st July. So I hope now that's clear. Don't say that it's a blanket. You always need to ask yourself, the gratuity payment is relating to which periods? That will be what will determine if it is exempt from tax or not. So gratuity payments relate after 1st July, and not the payment period. The period the gratuity lump sum amount is relating is the one we are talking to. We're talking about not the return period. We're talking about the period the gratuity is relating to. If it's after 1st July, no taxes. If it's before 1st July, so it goes without saying then that most of the gratuity employers are paying in July. I can assure with more without a doubt of I can say without much doubt that you should pay taxes on the gratuity, because the periods they are relating to are before employment periods. Those gratuity amounts you are making payments now to employees in July are relating to periods before 1st July. And of course, those periods you need to calculate pay and pay the taxes to KRA. Okay, we go to arrears quickly because of, I think I needed just to take more time. Even if we go slightly above our normal, but I think it was just good to clear because there are so many questions on gratuity yesterday on the session. Now let's go to arrears. Let's assume Kenya Power maybe has entered into an employer, let's say like Kenya Power, even maybe the one I'm using. Let's assume an employer like Chandarana's Power has entered into a collective bargaining agreement with the workers union, and they have negotiated a pay rise, which probably lead to, let's say, each employee will earn an additional 10,000 per month. And when are they backdating this? They are saying, as much as, and we've signed a CBA in July, we wish this to start from January 2025. So again, that is now where the aspect of arrears comes in. So what will happen is, you cannot just come and say, this employee is earning 10,000 for January, February, March, April, May, June. That is 60,000. So let's just clear 60,000 in sheet B. The employee will be overtaxed because you might be moving them to a payee tax band, which they should not be at that month. So what happens is, that's where this arrears option comes in to take care of such scenarios where you'll now backdate the 10,000. You'll come and select the year, 25. You'll come and select the month, January. You'll come and select the arrears amount, which I've just used, 10,000. You'll also come and capture the taxable pay for that employee in January, which is, let's say, 20,000. The return will add the 10,000 to the 20,000 and now arrive at the correct tax bracket, which is, so you'll come and say tax deducted on the taxable pay, any, of course, then of course, including even the relief. Then if this person was earning 20,000, it means they never utilized their relief. So of course, at this point, you now come, never paid any payee anyway, earning less than 24,000. So maybe you'll come and capture something like the relief here. Then now this person will now arrive at the tax rate of someone who ideally should have earned 30,000. So a person who earns 30,000, how much probably is there? How much is a pay? Then maybe you'll now come and capture the pay. So again, that is basically how you capture the arrears, and you'll do that for January, you'll do that for February. So you'll do each period. Of course, at the end of the day, if someone is already in the 35% bracket, whichever arrears they are being given, it will be taxed at 35. But the problem comes in if someone is oscillating between the 10% bracket to the 25% bracket to the 30% bracket to the 32.5 to 5%. Those people, you can't use a blanket rate. You might need probably to go the way we've explained, so that you arrive at the correct payee for each employee for each month, depending on where they are moving to which tax band they was applicable to them when you add the arrears amount to their normal taxable pay. So again, that is on arrears. I think I've done justice to this sheet on all the possible 3 scenarios. We can go now to the fringe benefit tax. This is where employers provide low interest loans to the employees. What you just need to, I think what you need to note here is not loans are priced on an annual basis. So when you're capturing the loan amount, let's say Kenya Commercial Bank is offering maybe loans to its employees, and maybe the rate is, let's say, 5%. So they'll calculate 5 divided by 12. So please note, you need to capture the monthly interest, because loans are priced annually, but fringe benefit tax is paid monthly. Then the prescribed market interest rate is also, let's say, it's 10%. Remember to divide by 12. And I think all the other things will fall in place, and you can be able to arrive at the correct tax bracket. I think that is it. We go to the last sheet, the tax due sheet. We now have pay deducted, pay tax deducted from employees under sheet B, which is both persons with disability and with no disability. We have some pay tax on from sheet C, which we've just gone through. Fringe benefit, I don't have any pay because I've not mentioned, I've not captured anything. We have a column for the captured deducted from employees with no. We provided this, but it should only be used under extraneous circumstances. Please only use it when you need it. Otherwise, if an employer does a good KYC with their employees, they may never be required to use this column. Even including those employers who are using, those employers who have hired non-Kenyan, non-residents, people from outside the country, foreign employees, you realize you can, KRA still issues a PIN. KRA can still issue a PIN to a foreigner who is to Kenya to work as an employee within 24 hours of you providing the correct document. So again, we should not be having these scenarios of you having to use this column so many times unless under very unique circumstances. Because even for the foreigners, they have a letter of introduction from the employer, they have a special pass or a work work permit, a special pass or work permit from immigration, and they have a copy of their passport. They can be able to have, they can be able to be given the passport, even as the alien ID. So again, this aspect of saying that we are waiting for the alien ID should not be the scenario, even if you're dealing with foreign employees. And of course, always ensure that your employees give you a valid PIN certificate, and the PIN certificate must be having an obligation. Why are we saying that? Is because KRA allows our students, our young guys who are just getting PINs for the sake of opening a bank account, applying for a help loan, to get a PIN with no obligation, but that PIN cannot be used in the pay return. So again, when you're hiring someone, their PIN is valid, and also it has an obligation. If you realize it has no obligation, request them to amend the obligation details before you onboard them on the payroll. Okay. We come to the total payee is there. We come to the total housing levy contribution. So how has the return arrived at? We go back to sheet B. We go to column, what is the column for housing levy? The column for housing levy is column T. So we have this column. Then, so basically what we've picked the employees' contribution. We've picked the employees' contribution. We've multiplied by 2 to arrive at the employer's contribution. But we still allow you to even edit it further in case you have some employees who might not have been in the payroll. So you can edit it upwards to capture affordable housing levy from employees who did not have PIN numbers. Okay. So let me capture. I don't know why it's so you can capture it. Okay. Let me go to. Okay. So you can capture. You can increase this amount for the affordable levy to take care of any affordable housing levy from employees with no PINs, meaning they were not captured also in the sheet B, but of course their payee was deducted here where applicable. And also we come to NITA. This CSV had 10,000 employees. You can still increase it, the number of employees to 15,000. So again, to take care of any employees who are not captured under sheet B, but of course NITA is applicable. And I forgot to mention this, when another sheet B, please note affordable housing levy and NITA levy is applicable to both resident and non-employees. It is applicable to both primary and secondary employees. So affordable housing levy and NITA levy is applicable to all employees in the pay return or in the payroll, both primary and secondary, both resident and non-resident. And I think we come to the end of I've tried to capture as many things as possible. And probably I've also tried to just before we go into, we are currently having I'm being told my internet connection is starting to be unstable. Mandy, am I still audible?
Yes, we're together. Thank you.
Okay. So quick one, even before we go to the Q&A, been having mentioned, we deployed some of the enhancements to iTax on Friday evening. So if you are having a pay return which is not calculating some taxes on CG row 1, CG shift is grayed out, CG taxable pay for row 1 or row 2 is not calculating, please just leave that where it is and download a fresh template, because we have updated the pay template even on the taxpayer profile on Friday night or Saturday morning, wee hours of Saturday morning, or you please go to the KRA website and download that pay return. It is up to date. It's the same pay return I'm using. As you can see, it doesn't have any issues on row 1 or row 2, whether on shift, whether I'm importing a CSV. You realize everything is intact. It's not dropping some things in the CSV. So just use the correct, all those things have already been sorted out. The return you may be using maybe the one which has issues. You can download on the website or you download the correct return today. If in case you not downloaded it after Saturday, from Saturday going forward, it will help resolve some of the issues you're having on some computation issues and things like that. On the other aspect also, we have some employers who are having branches. They have challenges with filing and payment, no, rather with generating affordable housing levy and NITA levy. I think the branches are able to the full liability. I believe you can be able to edit. We're working on that. You should be able to maybe just generate a payment slip, whether through head office, or you can edit the amount for the affordable housing levy and proceed to make payments. We are also aware a few such employers are not able, don't even have branches, and they are and we're still trying to get a solution for them, hopefully. So you just proceed to file and pay. It's very select employers who are not able to, when they go to generate a payment slip of housing levy, I think they are not able to see the amount, and probably the system is not allowing them to edit. But if you can capture the amount manually, please proceed. For NITA, if you are being told you've not filed the return period, again, very few, it's not cutting across. Those are issues we are dealing with. We also realize some employers who are amending their return before generating the pay for Affordable Housing Levy and NITA levy. They might be having some challenges generating some of these payment slips. Again, we are working on that. I think above all, I think those are some of the main issues which I think were raised as recurring from the last things we've done. CSV is not download the website. I've already mentioned that. Please engage your account manager or KRA on any social media platform. We should be able, or any channel you interact with KRA, anyone should be able to review the CSV. If you cannot come with them yourself, I think I've aspect on gratuity. I think those are the main issues. Maybe we can pick any new recurring issues or new issues which I've not probably covered training today. If maybe, have you managed maybe to Nini, or I just go through the charts directly?
All right. Thanks, Busaule. Thank you very much. Again, today we seem to be on time. We have about 20 minutes remaining for the Q&A session. Thank you for your insights. Thank you for going in detail, especially based on yesterday's session, the areas that some taxpayers were having challenges with, and we are getting positive reactions in the chat. Just before I the summary of the bulk of the questions that I've seen relate to the PRNs. I know you might have touched on it as your presentation was ongoing, especially the workarounds for AHL and NITA. But by and large, some taxpayers who have filed successfully are unable to generate PRNs for AHL, NITA, in some rare situations for PAYE as well. Those who said they filed between 25th and towards the end of the month. And generally for agency taxes, they're experiencing a challenge there. There's also an interesting query, and I don't think it's come up until today. Taxpayers who have PAYE paid in advance. In the old versions, there was a sheet that catered for that. So how will a taxpayer be able to utilize PAYE paid in advance in this new simplified PAYE regime? Then two things, column for directors' fees is no longer there. Where should that appear? And a proposal to automate personal relief. That was perhaps the lowest hanging fruit that we might have missed on this simplified PAYE return. Maybe it's coming in phase 2. But just before you address those, please allow me to very quickly restate those 3 highlighted issues we wanted. Now that we have employers in the forum, allow me to take this opportunity to just and actually, we've posted some sample CSVs. Busale, maybe you can try download them from your side in the chat. I know this is what should be in the website, but we note that they're downloading. And hopefully that's the correct one that is on the web, that should be on the website and should be accessible. So to all our taxpayers, please try and download what we've just posted in the chat. This is not how we should be communicating it. Of course, ideally, it should be available in the website, but please try and access it from there. And Busaule, you can confirm if that's the correct one, then they can even go ahead to share it with those who'd find it beneficial. So I'm getting some thumbs up. Maybe that is indicative.
I think,
perfect.
I think I've been able to download. I think they can download I think employers, you can download the sample CSVs from the chat. I think it's posted and they're working. Okay.
Perfect, great. So we were able to access those elsewhere and then provide them here. Again, not the ideal situation, but for now, please feel free to utilize those 3. This is what we'll be using moving forward as we work to resolve the issue on the website. So again, Busale, before you come in, have a glass of warm water, go through the chat very quickly, and you can address those issues to do with PRNs, PAYE paid in advance, and columns for directors' fees. But before you do that, please allow me to re-emphasize to our employers, the people bringing in the bulk of a big chunk of the revenue we collect within the Kenya Revenue Authorities, to first issue your employees with the correct P9 template. We experienced a number of challenges this year with employers not having updated their internal systems to issue their employees with the correct new format of the P9 that's available, on the website under publications. Similarly, when the time comes, please issue those P9s as early as possible to your employees. I note a number of government agencies are in this forum, and I'm hoping they will champion this initiative to issue their P9s as early as January. We cover the bulk of the employees by March, And between March and May, we have the rest of the Kenyans earning taxable income filing their returns or nil returns, so that we don't experience any technical hitches that we experienced in June this year. So please champion that. Now that the pay return is simplified, align your system such that by January we have accurate P9s and we have we've issued them to our employees. Finally, as Busale said throughout his presentation, is a re-emphasis to employers to comply with the amendments that came about through the Finance Act 2025 to grant their employees the allowable deductions as per the law and the reliefs that they are entitled to, so long as they have submitted information to the payroll team, and that those deductions are happening at the point of payment from payroll. So you have some evidence to support the same. They're being deducted at payroll. Please grant these reliefs, which these employees are entitled to and the law supports, such that they have more money at the end of every month rather than waiting at the end of the year to be in a refund position and then waiting a subsequent 3 months plus for their refunds to be paid. Once again, it's just to appreciate you all for always making time to attend these trainings. Between March and June, we were actively seeking your feedback to incorporate that feedback to improve on this P10, and we thank those developers, those taxpayers who volunteered to pilot, and this is just an effort towards this co-creation as we walk the journey together. We're in phase 1, we're trying to reach phase 3 of the simplified pay return, so we appreciate you all. A big thanks to you also, Busaule, for training us over the last 2 days under the weather, no less. So I'll hand over back to you, Busaule. I'll also ask you to just focus on the P10 elements and the filing components. I note there are a number of questions that are compliance related, and that's an area I've noted. We first and foremost need to urgently review the pay guide and have that uploaded on the website so taxpayers can make reference to the tax laws that support what the P10 is trying to provide, and then a compliance officer perhaps attending these trainings to respond to those more technical legal elements of whether it's gratuity, whether it's etc., all things regarding non-cash benefits, etc. So if you can just focus on the actual P10 filing so that we close on that in the next 12 minutes. Thanks, Busaule.
Thanks, Mandy. I think some people joined the training late. We said the sample CSV is under the chart. So please go to the chart menu. Under the chart, go to the chart, you'll see Mandy has posted a stakeholder engagement, the 3 sample CSVs you can be able to download. I think a lot of questions on where can they download, because the ones on the website seem like they're not working, so you can download them from the chat section of this link, the one you just joined. You go to chat down there, just next to on the icons for chat, you'll be able to download you should be able to download the aspects of the sample CSVs. A lot of questions on people are asking how they do you declare the person with disability. I think those are the ones who joined late. I think we covered it conclusively. The new sheet was all types of employees, whether the ones with disability or the ones without disability. And the ones with disability, you'll be required to capture the exemption certificate number, and it has a CSV option. They say the hosts are disabled the attendee chat. Okay, Mandy, maybe you can check that. Maybe me I attended because I'm a panelist. Oh, okay, I don't know. Mandy, can normal,
all right, sorry. Some taxpayers are able to access it. I'm not sure exactly what the challenge is, but just a moment. If you stay right there, I should be able to enable the chat. I know they can't chat on the chat, but they can access the information on the chat. Though let me
access, but you can't chat. But
just try again if that's okay. It should be allowed right now. Please proceed, though, Busaule, in case you see any other FAQs that came up, and also the issue of the PRNs, the pay paid in advance column for directors, and yeah, that's all. Thank you.
So there was the question on director fees. Director fees, as I mentioned, I think I'd also mentioned, I think probably the person joined later. I'd already mentioned it's part of the total cash. And I mentioned part of the total cash pay, we no longer require the breakdown, whether it is basic, housing, transport, director fees, you capture it as total cash pay for director fees. That's where you capture it. A question on advance payments, where now that there is no sheet K, which used to allow you, where do you capture the advance payments you've done in advance. When you have any advance payments available in the ledger and you've not utilized them, you will file a return without the advance payment. You will go to the payments menu. Under the payments menu, you will get to the sub-menu called set of advance payment. Then you'll go and select the PRN. You will select, enter the, it will allow you now to set off that PRN against the liability. So you must file first, then go and set off the advance under the payments menu, under the set of advance payment option. So while you are disabling it, we'd already thought about the main, actually the correct process of you doing set off should not be in the return, should be using the set off menu under the payments menu, set off advance payment, use the PRN option, then you should be able to set off your PRN against the liability. Can you automate the personal relief? Yes, we can automate the personal relief. But again, it will, so we'll automate the personal relief. Yeah, we can try to find a way of automating it. But of course, if you're using a CSV, it is on the fly. I think mostly this one will be more of an added advantage for the people who are manually capturing employees on the pay return, because you just need to put the 2,400 and drop down. I think, but anyway, we'll try to find a way of automating it. We've already did it on the ITR, in the Excel and the web-based, so we should be able to find a way of automating, maybe meet that need on that. Many people are asking about the pay guide. I know it is somewhere on the KRA website, and also the aspect of the updated P9 form. I know it is on all under publications, Mandy. Maybe you can in the meantime,
the pay guide review is not under the publication section, but the P9. I think if you go to page 3 or 4, posted around February this year, you should be able to find the correct format for P9. The pay guide is under, I believe, tax education, but if you search it on the Google or any search engine, you should be able to find it on the website. Thank you.
So on the page, just search KRA pay guide. You should get a link to it, not necessarily under the website. Also, for the updated P9 form, just go to some publications information around February. I think that was when it was updated. You should be able to see it and employ and align your P9s to that. And even you're already talking with the Ministry of Public Service to align the government P9s also to that, because I think that is also something which will be will affect a portion of our employees. Is per diem part of other non-cash allowances? I think, Joyce referred to the, not all per diems are taxable. I think read the on per diem and then know if it is the one which is above a certain amount, then of course it will be it's not a non-cash. Per diem is actually a cash allowance. Yeah. And as in for me, I don't see it as a non-cash. It's more of a, because you are paid in cash. It can't so the amount above the taxable limit, you capture it as a total cash pay. I think that should be the best way, where it's for that month where you need to either tax the extra amount or probably recover from the employee.
Sorry, Busale, allow me to just request you to talk about the issue of PRNs. And then for those who, for one reason or another, had already filed in the old system, and they are, first and foremost, is that okay? And secondly, they might have filed and then subsequently are unable to generate PRNs for both the pay and the agency taxes. Could you kindly clarify on those two? And then please proceed. Thank you.
Okay, I know some of you have still you've still insisted to use the old template, even after KRA communicated in a public notice in June and guiding you that you must the simplified pay return for July. Yes, for this month, we have allowed both, but you don't need to use the old template, because the same challenges some of your employers are having now, you will have them in August. You'll not have any option to use the old template. So I think the best way is use the simplified pay return. We are still having 4 days due date, understand challenges, know how to resolve them. Then at least come August, it will be your second month of filing. So today you can't do both, but I'll advise you, you are just postponing your challenges to August, and August you'll not have any option to use the old template. So the old template will not be there in August for sure. we will not allow anyone to use the old template in August. In July, we've allowed both because of certain, we've just allowed it both. We just wanted to see if the average employer will follow guidance without being pushed to the wall. But now we've realized we'll have to deactivate it with immediate effect. So that's because seems like until they don't see it, they will never use the simplified pay return. So I will deactivate it for you so that you use the simplified come August. On the aspect of, and that's what I'm saying, for sure you should not have any challenge generating a payment slip for pay as you earn. For pay as you earn, there should be no challenge whatsoever. If you're having a challenge with pay as you earn, please clear your browser history or your browser cache and try again, especially if you've already filed. If you're having a challenge with NITA and affordable housing levy, if you are someone who has branches, you can find a way of, you should be able to proceed for branches. It's only that I think the amount which are pre-populated are not tied to the branch. So again, you can either engage the fees to do it for you, or you can edit the amount. But we have a few employers, very few, whom are not having branches filed, but they're still not able to generate a payment slip for NITA levy. I think, and affordable NITA levy, I think, is still not filed, and affordable housing levy is not bringing the amount. In case it allows you to capture the amount manually, please go ahead. But if it doesn't, we are working on now those unique scenarios where you are not allowed to capture it manually, neither is it pre-populating the amount for NITA and affordable housing levy. That one we are issue, we are working on it. So you just proceed to file, make payments for PAYE as we sort out the affordable housing levy for those few employers. It's not cutting across a huge number of employers. From the analysis already done, it's affecting very few employers, and we are working on that. Someone allow me to respond to a question on Doreen on gratuity and how do you file for gratuity whereby an employer pays it yearly, since it's yearly and it has to be expensed? How do you file for PAYE for salaries arrears relating to delay in donor funds? I think I already showed you how to do arrears, but let me respond to the second aspect. When an employee has offered their services to KRA, me and Mendy, we've been working from 1st July to 31st July. But come the end of the month, the employer does not have money to pay us. That is not arrears. It is just employer does not have cash flow issues. So I think let's separate the aspect of cash flow issues with arrears. For me, that is not arrears because the employee has already offered their service to the employer. It is the employer who does not have money to the payee. What the employer needs to do, they need to file the pay return because the employee has already offered the services to the employer within the month. You need to pay them. So even on an accrual basis on accounting, you need to account for that payroll expense, even if you don't have money to pay there. And the same thing for payee. Go and file the pay return. When the donor provides funds or when cash flows come in, then go and clear the payee amount. But don't hide behind filing as arrears aspects to do with employers having cash flow issues, because that was not the intention of the arrears sheet. The arrears sheet was for totally different scenarios. So please note that bit on then there's something that they are accounting for gratuity on a yearly basis. That is fine. Whether you choose to account for gratuity in your books on a yearly basis, let's be honest, at some point, gratuity has to be almost tied to a monthly, because there has to be some bit. This person is earning this much, percentage of this much for this period, for this. So even if you are accounting it on an accounting basis at an annual basis, you probably still need to come and determine that you may still need to cascade it down to the, because employment income is accounted on an annual, a monthly basis. Ideally, you should still be able to report on an annual basis and determine whether the gratuity is payable or not. So I think on that, let me see if there is any. Someone is having an import error ID 70 when importing the CSV. It basically means you are importing a CSV which is open. Close the CSV, then import it. Simplified version does not capture NITA and housing levy. Even if you capture the amount manually and file the receipt, send that was Paul. I think that was an issue previous one. I believe the ones who have filed now, the simplified return is, the agreement is coming up with the housing levy and NITA. And if you go to generate, you are seeing them. Someone can confirm that. That was an issue in June, not July. And I believe something else on
maybe you can tackle the last two, then we close. Thank you.
Okay. I'm trying to see if there is any compatibility issues. I think we said guys of Office 365, guys who are having Office 365 and having compatibility issues, please post your details with your phone number at some point. No, we are not probably confirming if it will be before the due date, but we'll reach out to you because we've realized there is a way you can just tweak your Office 365 and you'll be able to access all our returns. And some of our colleagues in the office have been able to do that, and we it is working. So there is a workaround around it for Office 365 and any higher version of Windows who probably might be having some challenges. We know there is a way which you can be able to still file the return. But for now, you can still share the return with your account manager. They can and send it back to you if you're probably not having any computer within your vicinity, which is having a different version of Office from the one you are currently having challenges with. But I think we've confirmed there is a way you can go about it, tweak some controls in the return, and you should be able to I think we've answered most of your questions in the training. Some are just repetitive, and we wish you guys well. And in case of any further support, you can reach out to KRA through any of our contact center through calls, emails, through our social media platforms. You can reach out to your account manager at the tax service office. They should be able to work with you and clear and support you until you are able to stand on your feet. And thank you very much for sticking with us and myself with Mendy. Much love from KRA, and wish you guys a blessed August and all the best. Okay.
All right. Thank you, everyone. It's 11 a.m. now. We wish you a blessed rest of the day. Thank you for always honoring our invites and making the time to be here. See you during the next training. I note a number of requests for VAT, Busaule, so heads up. Perhaps the next time here will be a different tax obligation. Otherwise, thank you all very much and have a blessed day. Bye. The session is now over and you're free to leave at your leisure.